So what's behind the pullback and overall stock market really kind of looking for direction here? Off to Cincinnati we go, and Pete Sorrentino of Huntington Asset Advisors for some answers. Pete, good afternoon.
Good afternoon, Carol.
So what do you make of this market? Is it just we're waiting for more clues in terms of earnings and outlook and visibility?
Well, in the last 3 days of the week here, we're going to get earnings reports from the other giants in the banking industry, and I think that'll give you an indication of the overall health of the banking system, especially as it impacts sort of the middle market business borrower, as well as additional insights on the deterioration in consumer credit. So there's still that cloud hanging over the system. We've had the big repricing rally in the second quarter, and so now we're back to what can you really earn? And as you pointed out in that previous note, Barney Frank and company are rewriting the rules of the game here. So, you've had 2 great quarters for Goldman Sachs, but that creaking sound you hear is the door closing. The rules are going to change here shortly, and the kind of things they've been able to do in the past may not be possible in the future.
Well, Pete, what does that mean for those financials that you own? You own Goldman, you own J.P. Morgan, Wells Fargo, and Citigroup. Those later companies are going to report later this week. What does that mean? Are you concerned as an investor and that maybe it's time to maybe start kind of scaling back on your position potentially?
Actually, Carol, as soon as we saw the print on the Goldman Sachs numbers this morning, we wrote covered calls for August maturity at 170. So if Goldman were to run, we're happy to part with it here. It's been a great stock for us, but the rules are going to change going forward. We think as the economy rebounds, these strong players in the finance sector are going to do well, no question about it. But will they achieve the kind of profitability they have historically? We don't think so. And so as a result, we've got a very, kind of controlled placement in the finance sector, specific to names, and we're content to let them go at the right price. Fear of the unknown, I guess, is our biggest watchword right now. So, at the right price, we'll part with any of those names.
Let me ask you about the unknown here. Why does Goldman Sachs continually surprise on earnings? I mean, they've beaten, I think, 14 out of the last 16 quarters. How bad could Wall Street analysts be that they continually miss to one side?
Well, Matt, right now nobody's being paid for heroics. If you're an analyst following these stocks, the last 4 or 5 quarters have really taught you to be, dismiss all past assumptions, and so they're being very conservative on their numbers. Plus, you got to remember, this is like a nuclear war. The only left standing right now is Goldman Sachs in terms of the ability to reach markets. You had all the financials that were pressed to raise capital, so you had a huge equity issuance. If you want to move that kind of paper in a bad market, Goldman's got to be one of the first names on your Rolodex that you're going to hit. So they, in the absence of any competition from the likes of Lehman Brothers, Bear Stearns, you've got the distraction factor at what was Merrill Lynch and others. Goldman, literally owned the playing field, in the last 2 quarters, and so they're going to draw the lion's share of business. And, again, analysts are not being rewarded for being heroic. So, they're being a little cautious on these numbers.
Hey, Pete, this is Chris at the New York Stock Exchange. So then what's the report that we're looking at next with these financial banks? I mean, which is the one that you think is really going to impact which direction the financials go?
I think we have to wait really until Friday because you're going to get a couple numbers coming out then. We'll have the Bank of America numbers and we'll have the PNC numbers. And that'll kind of give you a flavor for what's really going on in sort of middle America, if you will, or sort of that mid-level consumer and small to medium-sized business. And that, will give you, I think, an indication of, what was the overall deterioration, if there was, and we think there was, during the second quarter, and how that's going to impact the industry going forward. It may challenge assumptions about, do they have to do additional credit raises? What's loan pricing out there? People behaving rationally? Is loan growth actually taking place, or are they simply letting portfolios roll off and they're parking the reserves? So those are the questions I think we get answered between now and the close of the market on Friday.
Hey, Peter, are you worried as a shareholder about any potential fallout from the compensation issue? I mean, as 10% of Americans are out of jobs, Goldman seems to be boosting compensation to an amazing amount.
Yeah, it's very difficult in this climate to to own a stock where you're seeing that happen because the populist rage against the whole sector right now. If you look at the proposed legislation that right now is circulating on Capitol Hill, if there were a more balanced view of the world, there wouldn't be this sort of desire for vengeance. But the Goldman thing simply, I'm afraid, is going to feed into that at a point in time when those bills are hitting the floor and they're coming through committee. I don't think anyone's going to get in the way. There'll be no toning down. There'll be no backing off on them. So, as I said, we're pretty conservative on this group longer term.
All right, got to run. Peter, thank you so much. Pete Sorrentino, everybody.